Good morning and welcome to Bloomberg Quint, India's first digitalized streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The US administration confirms that it plans to raise tariffs on Chinese goods, accusing Beijing of backpedaling on commitments made during the negotiations. Back home in earnings, ICICI Bank's profit falls in the fourth quarter, but asset quality improves after a 7,300 crore write-off. A one-time gain helps Bharti Airtel report a profit. India mobile revenue grew at its fastest pace in 3 years. And Chief Justice of India Ranjan Gogoi gets a clean chit from the Supreme Court's in-house inquiry committee in the sexual harassment case. Well, let's take a look at the trade setup for the day. The globe was not looking a happy place, especially in light of the comments that came in from the US. So Robert Lighthizer, the US trade representative, said on the tariff wars that, and he says, and I quote, that we felt we were on track to get somewhere with regards to the negotiations. Over the course of the last week, we have seen an erosion of commitments by China that, in our view, is unacceptable. This was essentially Robert Lighthizer trying to explain what led to Donald Trump tweeting on Sunday. So there was a method to the madness that happened on Sunday. A lot of people were doubting that. Maybe US has seen reason enough for this upping of the ante. Now, what it did yesterday is one thing, but when Robert Ligthizer's comments came out, the S&P futures, which started trading, immediately started off slightly lower, so dropped about 0.5%. This is what happened in early Asian trade. The S&P futures fell by about 0.5%. It's not having a necessary contagion on the other markets, but I think what all of these comments do is raise a question or two about whether or not these trade talks, which everybody was expecting to culminate by the end of May, it raises doubts on whether these trade talks can culminate at that quicker pace. An early resolution, a quick resolution, a satisfactory resolution to the trade talks seems to be less likely. In fact, if you read all the columns on Bloomberg as well, by Bloomberg economists as well, all of them seem to be saying the same thing, that while it's very difficult to predict what could happen, a quick deal and the resolution of tariffs is a lot less likely than what it was maybe a week ago. What does this do to the markets? Well, we are trading some very important levels for the index. Now, keep in mind, we were talking about this yesterday as well. Since the end of the March series, and March series ended at about 11,550. April honored that level quite in a very strong fashion. Twice or thrice or four times in the last 70 days. We've come to those levels of 11,550 and then bounced back. In yesterday's session, we are at 11,600. We are likely to start off marginally higher today. So remains to be seen if we breach that or no. But if the world market picture worsens, then those levels are likely to be breached. And what would this do essentially, amongst other things, is keep the trade-related stocks under pressure. We've seen what happened in trade yesterday in our markets, the likes of Motherson Sumi, Bharat Forge, Tata Motors. A lot of global trade-related stocks were under severe pressure for no fundamental reason other than the trade talks worsting. When these S&P 500 futures fell, the futures of stocks like Apple and Caterpillar, etc., fell too. So globally, the trade-related stocks are likely to remain under pressure. So keep that at the back of your mind. Volatility is inching up, and that is a problem for our markets as well. India VIX is at the highest level since September 1st, 2015. And flows, the FI flows, which were the stronghold for India for the better part of March and April, are starting to slowly drift away. It's early days, to be honest, just 3 days in the trading month thus far, but all 3 days I've seen an outflow. Yesterday about nearly 1,000 crores, so that number is also not pleasing to the eyes. We will watch out for results. Not too many nifty results today. Vedanta is a lone wolf of sorts, but there are 2 or 3 important mid-cap consumption-related names which will come out with results, and the street will be eyeing them. So Escorts, a very important number. Siet, an extremely important number, and VIP Industries as well. It doesn't quite get impacted with the auto slowdown and the staple slowdown, but what's happened there, it'll be interesting to see if it's happened to the baggage space as well. So VIP Industries would be an important monitorable. So 2 or 3 very liquid, very trader-friendly stocks will come out with numbers during market hours, arguably all of these, so important to monitor. However, what are the stocks that are likely to react this morning? And a bunch of them which could have a potential reaction, so slightly long list, bear with me. Bharti Airtel, I won't talk about the numbers in detail, but keep in mind that the India mobile revenue growth has been positive for Bharti for the first time since Jio's entry. That and other monitorables, Sumit will of course join in on First Word to talk about that. ICICI Bank, I'll take you through the mixed quarter that ICICI Bank has come out with. Asset quality is improved. Brokerages have hiked the price target unanimously. So important stock to monitor today. Let's wait and watch. The ADR ended lower, by the way. So let's wait and watch what happens to the stock today. Marico, not quite sure what to make of it. Domestic volume growth over 8%. Gross margins at 8-year highs. India and international growth better than peers. But the numbers, mixed bag. Stock was down about 4.5% ahead of the numbers. Let's see how this one reacts today. I doubt with the numbers that it has come out with that there is a lot of other negative reaction left, but consumption by and large is taking it on the chin. So maybe Marico could follow suit too. A reasonably strong quarter for Godrej Agrovet and G Shipping. You don't normally talk about this. It's a very interesting quarter, and we'll talk about that a bit later on too. Watch out for these two names. Lastly, CG Power, the plans to sell the Hungarian business fall through yet again. Darshan has written a piece on this on the site too. Maybe you could go onto the site at some point of time and read that. And lastly, not that I think a stock split in any way does anything material to a stock, but because it's HDFC Bank, so widely held, so need to put this out here that it's going to consider splitting each share into two on May 22nd. It's such a widely held stock from a retail side as well that important to mention this. However, let's tell you what's lined up on First Word today, the collection of the top pieces that we believe we should bring to you, dominated by earnings. Sumit takes us through Airtel's earnings fine print, while I focus on ICICI Bank's numbers. Darshan then comes in to talk about Great Eastern Shipping and why the counter could be the one to focus on in today's session. Yeah, wind beneath its sail. That's a nice one. And lastly, we end with Sharad, who joins in to tell us how a handful of realtors have made the most of the turmoil that the space has been in over the last 3 years at least, if not longer. Okay, let's talk about earnings. Bharti Airtel reported a surprise profit in the fourth quarter, but that was largely thanks to a one-time gain. What's more heartening though is the fact that in the India mobile business grew at its fastest pace in 3 years, and I believe for the first time recorded a positive number since Jio's entry. Sumit is here to talk about those numbers. Sumit, put those numbers into perspective.
So I'll start off with the consolidated numbers first. Good morning, Idit. So if you see on a consolidated basis, the revenue of the company that was higher by nearly 2% to close to 20,600 crore rupees. The EBITDA jumped nearly 6.7% to close to 6,600 crore rupees. Now this EBITDA growth of 6.7% is the highest reported by the company in the last 12 quarters. Now this was aided by lower other expenses, lower sales and marketing costs, and lower employee costs in the fourth quarter of financial year 2019. On the margin front, margins expanded by nearly 145 basis points to close to 32%, and this is the highest margin expansion reported by the company in at least the last 14 quarters. Net profit though, that was up nearly 24% to close to 107 crore rupees, but that was on the back of an exceptional gain of close to 2,000 crore rupees, which was related to cost and other charges that aided the company's bottom line. So this, when it comes to Bharti Airtel, investors and analysts are looking out for the EBITDA number and for the revenue growth number. So the net profit actually does not matter here. So if you see in this fourth quarter, the India mobile business revenue, now that grew nearly 4% to close to 10,632 crore rupees. Now analysts are working with a number of close to 10,200 crore rupees. So there's a big beat coming in when it comes to the India mobile business revenue, and which is the most positive thing coming out from the Bharti Airtel earnings yesterday. So now also due to this ongoing rights issue, the company has not shared any details related to subscriber base, the ARPU numbers. So we cannot give you much details on what could have aided this revenue growth for the India mobile business, but according to my conversations with analysts, this could have been aided because of the rising share of 4G users on its network. So that could have aided the company's total revenue growth, and analysts are expecting this ARPU number to be close to 125 rupees per user per month, but we do not have an exact number given from the company, but that could have aided the company's number. Now if you see, along with that, in the India mobile business, their EBIT losses, now that also contracted to close to 1,378 crore rupees versus a loss of close to 1,900 crore rupees reported by the company in the last quarter. So good performance coming in from the India mobile business, which is very positive for the company. Now on the bottom line front, if you see the finance cost, now that was higher by nearly 30% to close to 2,500 crore rupees. Now that also worked against the net profit of the company, and this was higher because of higher debt that the company has seen in the fourth quarter. quarter. Now, that total net debt was higher by nearly 6% to close to 1,12,000 crore rupees, and that could be because of the capital expenditure was higher for the company in the fourth quarter, as the company had earlier indicated that in fourth quarter the capital expenditure could be higher. Lastly, the leverage ratio of that also increased to 4.37 times from 4.28 times in the December ended quarter, and that is because of the higher debt that the company has reported in the fourth quarter of financial year 2019.
Now, Samit, I don't know if brokerages have already come out with the notes or no, or what have you made of the numbers, and whether anything with regards to pressure on Bharti due to the last few quarters is showing signs or they are showing signs of being able to handle that pressure better, because as I read the morning mail, it's for the first time since Jio's entry that the domestic business has done well or turned into the black, and to have brokerages given a thumbs up to these numbers.
Well, for the India mobile business, yes, they have given a thumbs up because it has come in above their estimates. They were expecting the number to be close to 10,200, 10,600 is a very good number that the company has reported. As I said, the company has not shared any details of the 4G subscriber base and the ARPU numbers, so they also could not give in much details. But but they are all positive because of the growth that the company has reported on the India mobile business. So that's the positive thing that has come out from the Bharti Airtel earnings, and analysts are also positive on the stock because of this one number.
How does it stack up on the valuation parameters, not compared to any, because I don't think you can compare it to a Vodafone or to a Jio, but generally to its historical averages? Samit, how does Bharti Airtel compare right now?
Well, it is trading below its historical averages. So on the valuation front, it is available at a cheaper valuation compared to its past averages. But as of now, we actually cannot compare Bharti Airtel to neither to any other player nor to its historical averages, because the situation in the telecom industry has changed a lot, and so the valuations will obviously come down a bit compared to what it was trading earlier because of the competition that we have been seeing and in the telecom industry. So valuation, actually we cannot compare Bharti Airtel, but yes, the stock is available cheap compared to its earlier valuations, and this India mobile revenue growth number is very positive that has come in from Bharti Airtel earnings.
Samit, thanks so much for putting that into perspective. Difficult to predict really, but a bit of a plug out here. If you go on to the website and try and see any of the BQ Edge events, there is a conversation with S. Narain of ICICI Pru, wherein he explains in great detail at some point of time in the conversation about why is it that telecom is likely one of the top bets that he believes investors can make right now. A fairly wide explanation from Narain about why the business itself, and I guess in more ways than one you can figure out that you're talking about a Bharti Airtel or a Jio and not necessarily a Vodafone Idea. But why is it that the telecom stocks might be in for making some gains for investors? I don't know if this quarter is an indicator of some good times ahead to come or no, but some green shoots in this quarter for sure. Samit, thanks so much for putting that into perspective. ICICI Bank, that's the other number that you need to monitor today. Important number. We're talking about how private sector banks have by and large, say for Yes Bank, done well. This bank's profit fell in the fourth quarter. Disappointing analysts who probably expected the lender to double its earnings, but asset quality did improve thanks to a big write-off. Now, let me put the numbers into perspective. NIIs at 7620, up about 26.54%, but the bottom line numbers down 5%, and as I said, below estimates. Now, some pluses and some minuses, and I'll try and take you through all of those. So the pluses, if you look at them, the asset quality improved. Gross NPAs 6.7% versus 7.5%, so they have come down. Net NPAs have come down 2.06 versus 2.58, so that's heartening. What's kind of not done well, or maybe actually even the book, so the BB rated and below, the book has to come down from 18,812 crores to 17,525 crores, but a few red dots. So gross slippages 3,547 crores, those have increased. Recoveries and upgrades have fallen, so about 1,522 crores versus 4,063 crores, and write-offs have really shot up, so 7,300 crores. As we said, there's one key reason for the lender to do what it did in the quarter gone by. Provisions, however, at about 5,451 crores, so that is one number to monitor. Provision coverage ratio has improved to 80.7 versus 60.5% on a YOY basis. You could argue on a QOQ basis too, it's moved up a bit, and net interest margins have certainly improved and improved quite a bit, so to 3.72% versus 3.4% in the quarter last year. Other income was down, operating expenses have moved up, operating profit has gone down. So you could look at all of these numbers and say that it was a mixed bag, but the one big number, the reported PAT number, was lower than estimates. So in that sense, the numbers were below estimates. However, the interesting bit is what brokerages have said when it comes to these earnings. So we have this graph which shows what brokerages have done on ICICI Bank post Q4 results, and almost all of them unanimously have raised the target. So if you look at Citi, CLSA, Credit Suisse, Deutsche Bank, Edelweiss, that whole bucket, every single new target is higher than the old target. That speaks volumes about how the street gave its verdict on ICICI Bank numbers despite the fact that it missed targets. So this entire table shows you what all the brokerages across the board have done. The ratings remain a buy or an outperform, etc. So most of the street numbers are bullish. I just want to briefly mention what a couple of lines from each of these brokerages were, which is very strong. So Citi, for example, believed that the strong PPOP growth and low credit gross costs should drive earnings growth. So that is their assessment. CLSA taking heart in the fact that the management has reiterated the consolidated ROE target of 15% by June 2020, which to a lot of brokerages is very, very important. And Deutsche Bank believes, again, that there's a better visibility for greater than 15% ROE in FY21. And I think the street is looking far beyond FY20 really when they look at ICICI Bank. So largely a miss on the bottom line, but there were some good things to take heart from, and brokerages, as I said, unanimously have upped the target price on ICICI Bank post these numbers. The ADR ended lower, keep that at the back of your mind, but let's see what the stock does in the session today. Moving on, in the broader markets, one set of results that stood out is that of Great Eastern Shipping Corporation. The company returned to profits last quarter, and Darshan Mehta is standing by to tell us what exactly happened and why is it that GESCO or Great Eastern Shipping is such an important number to monitor today. Darshan, good morning.
Yeah, good morning, Neeraj. So what we do every day is pick out one stock or one result which we believe has done exceptionally well, and this probably will be from the mid-cap space or the small-cap space. So today, Great Eastern Shipping, if you're looking at this top line growth of almost 27% is something that we've seen. But look at the profit growth, 12 times profit growth. If you're looking at the EBITDA up is almost, the EBITDA is up almost 12 times. EBITDA margins at 31% versus 3%, and net profit of 150 crores versus a net loss of 420 crores last time around. Now we'll break it up what affected the top line and EBITDA and what affected what aided the bottom line. On the top line, the charter rates were much higher, and the yields that they had both on the crude carrier as well as product carriers jumped significantly. On the crude front, the average yield jumped 68%, and on the product carrier, the average yield jumped 12%, and that is why that helped the top line as well as EBITDA of the company. What aided the bottom line, from where it moved to a net loss to a net profit? First of all, there was gain due to a lot of changes and benefit because of the derivatives contracts that the company has, and there was no tax expenses. So if you're looking at the tax expenses, just 40 lakhs compared to 160 crores last time around, and there was a net gain of 104 crores in terms of derivative contracts, that's the MTM that they have, compared to a loss of 21 crores last time around. So that is below the line, not in terms of operational. So operationally did well even on the bottom line because of these one-offs. They did manage to do well. As far as the balance sheet is concerned, if you're looking at the debt rose from 2430 crores to 2504 crores, but the leverage at this point of time is rather stable. The ROEs improved to 1.6% from 0%, and the ROCE improved from 3.7% to 4.3%. The other announcement that came out was a dividend of 5 rupees per share, and they plan to raise almost 1000 crores via NCDs. So all factors, Great Eastern Shipping came out with a decent set of numbers.
Okay, let's wait and watch if it reacts. Typically, I've seen when GESCO or Great Eastern Shipping reacts, it tends to react very strongly for the day and then cool off. Let's see what happens in the session today. It's not a very high volume stock, so please be careful if you plan to trade this one based on the numbers. The volumes tend to be very erratic for this one. The last piece on first for today is on real estate. Now, that space has seen more than its fair share of turmoil over the last few years. It may have started with demonetization, RERA, and then the partial shift to GST. The NBFC pain also expected to take a toll on the sector that typically needs a lot of investment. And that means only a handful of developers would have managed to gain ground over the past few years. Sharad Dubey is standing by with some details and to give us some trends that have come out, which are the most prevalent as well. Sharad, what do you have for us?
Well, good morning, Neeraj. I think the consolidation has been very high, especially for the northern regions. Now, if we see post 2017 when the RERA came, so you see northern regions, their market share for the top 10 developers has increased. As you can see, this has increased for Gurugram, Noida as well as NCR. Moving on, even the southern regions has also seen an increase in the market share of the top 10 developers. This has also increased. And then we move on to the western region, which has also increased marginally, but it is lesser than compared to the northern and the southern regions. And lastly, there has been a marginal increase in the eastern market in the Kolkata. Neeraj, I would like to point out that we would like to see in terms of area sales, which developers have actually been there. So for your Gurugram, we are having Godrej Properties who have dethroned M3M India. Next, we are having for the Noida and the Greater Noida region, Gorsons have actually maintained their position as a top developer when it comes to area sales. And next, we are having Mumbai, in which Omkar Realtors have leapfrogged Lodha Group over the last 1 year. And if we see the rest of Mumbai metropolitan region, Lodha Developers still maintains its numero uno position. And lastly, if we see the southern regions in Bangalore, Prestige Estate has maintained its leadership over the last 7 years.
Some companies have sprung a surprise. You don't normally see a Godrej Properties being top draw in the northern region. You would expect DLF to be the case, but that's not been. And Omkar, interestingly, in 2018 has sold more than Lodha. So that's the sales picture, Sharad. What about pricing? Has that gotten more affordable?
Well, it's a very interesting play, Neeraj, if we talk about it. We see different types of trends playing up as per Knight Frank's report. So basically, a base of 4.5 is taken, so which is the amount of times the annual average household income is required to purchase an apartment in a city. So basically, we see the house to price income ratio, which is still very cheap, very expensive when it comes to purchasing properties, when it comes to Mumbai, NCR and Hyderabad region, and it still remains out of reach. But still, if you can see for Mumbai, it has actually fallen over the last decade from 11 to 7 in this index scale. Apart from this, if we see, the ratio has turned favorable for other metro cities as well. If we take Bengaluru, Pune and Chennai and even Ahmedabad. Of course, there is a stark drop when it comes to Kolkata from 6 to 3. Neeraj, apart from this, I think one more interesting place which we'll talk about is the average unit size of the homes have actually shrunk. So basically, the sizes of these average unit sizes have actually fallen for most of the metro cities, with the base taken as 100 when it comes to the sizes. So this has actually been falling for most of the cities. But however, there is a glimmer of hope with cities like Hyderabad and Ahmedabad actually going above the 100 base.
Well, I don't know if that's a question of affordability or something else, or just that affordable housing has taken center stage in a lot of cities like Mumbai, for example. But in the sales have been seen in the smaller ticket houses, and which is where developers have been trying to do that. But there, very, very interesting data, Sharad. Thanks so much for putting that into perspective. Two things that come out of this to my mind. One, that our notions of which builder or which developer might be the strongest in a particular area due to the past reputation need not necessarily hold true. Godrej, top draw in the Delhi NCR region or one of those regions is pretty interesting. And two, the shrinking of the units, the size of the units sold across a clutch of market seems to suggest that affordable housing is well and truly here, and that developers who are selling big units, or rather more number of units, are also probably focusing on that piece. Well, that's all that we have on First Word today, though. Lots more lined up on Indian Open. We talk about what to do in a scenario like this, especially at the broader end of the spectrum, with somebody who tracks this space very, very closely. S. Krishna Kumar of Sundaram Mutual Fund would be joining in to talk about that. Will commodities take a beating as the US-China trade tensions rise? Once again, we talk to David Lennox of Fat Profits, a very important conversation. And then turn focus inward into India's consumer story and all that's dampening sentiment. K. Krishna Kumar of Kantar would be joining in to talk about packet sizes and the impact on the FMCG sales over the course of the last 3 quarters. But after this break, a full tilt towards the immediate day's trade. Stay tuned to Bloomberg Wind Live.